What is up, guys? Welcome to another Hyve trading breakdown video. Today I wanted to take you guys through one of my trading setups from last week. Again, this is on the New Zealand JPY pair. I don't want you guys to think this is the only pair that I actually trade. However, what happened was I saw that price was extremely overbought. If you remember correctly from last trading breakdown video, price was overbought and I attempted to short the market, which I did, and we actually left with a 3% profit. However, price didn't really quite get to my overall take profit. So we saw that price continued to be overbought. So what I decided to do was to actually continue to look for shorting opportunities. So price went to one of my sell zones. So when I saw price in the sell zone, what I started to implement was something called volume spread analysis. Now, volume spread analysis is the study of volume in a particular candle and the volume activity that's taking place in that particular candle. As you would see, I'll explain more as we jump into the video. But guys, I hope you like this video. Hit that thumbs up button, hit that subscribe button, and let me know in the comment section what else you'd like to see. If you'd like me to elaborate more on volume spread analysis, let me know. But until next time, guys, I'll see you on the next one. Let's jump into the charts. Peace. What is up, fellow traders? Another week in the markets, and I've got a potential sell setup coming through. Well, it's no longer a potential sell setup because I'm actually in the trade. But what I wanted to do is basically take you guys through what made me get into this trade setup. This is actually New Zealand JPY, which is the exact same pair as last week that I took, and I'm still convinced that this market is still pretty bearish. And the reason why is because if you have a look, price came and traded up to this 80 psychological whole number. But what I would like to bring your attention to is actually this massive head and shoulders. This to me is a head and shoulders, and it's actually a form of Wyckoff schematic. I'll probably try and show you that on screen right now. So when it comes down to Wyckoff, there are several types of schematics, and they take shape in the form of either a double top, a triple top, or head and shoulders, or the reversal, or double bottom, a triple bottom, or an inverted head and shoulder. So to me, I feel like this pattern right here was actually completed by this break of the 75 psychological whole number and the break of the neckline of this head and shoulder pattern, which I've basically highlighted by this zone. Now, one of the reasons why I'm looking at this as a very good entry spot is you probably can't see this, but it takes quite a trained eye and also some experience to notice the manipulation that takes place in the market. So what I would like to bring your eyes to is basically this high and this high right here. So clearly the market was in a downtrend, right? EMAs signaling that momentum is to the downside. But what if you look at this clearly, these two tops right here was in fact a double top. So this right here was in fact a double top, and then what I can see, what I notice is that smart money, banks and institution, knowing that people, retail traders, are trading these double tops right here with their stops placed slightly above the high, they've literally pushed the price up, stopped out the traders, and as soon as that happened, look at this massive tanking in the markets right now. So for me, that just signals that this zone is still pretty much valid. So if we take that zone and extend it to where the market is currently trading at right now, we can see that we can see that price has come back to that zone and is actually reacting in that level right there. So that's how I've generated my zone. So if you watched my last video, you know that I like using zones as a way to protect my stop loss. So for me, I would like to put my stop loss above this zone as I expect price to actually turn around. But there's also other reasons as to why I believe this is potentially a great spot for price to turn around. If I take a trend line and I draw my trend line like so, what you can see is that price has touched one touch, two touch, we had a third touch here, and price immediately reacted from that third touch. However, what I do believe that price decided to do is to stop out the guys that were selling early right here on that third touch. So price has gone up, and I believe that this is manipulation, mostly because on my volume spread analysis indicator, there is no volume showing that demand is showing that there's actually demand in this price action. So what my volume actually indicates is that there is no demand going up, but there are sellers coming into this market. So for me, I just see this as a clear manipulation of banks and institutions stopping out the retail traders who were trading on this third touch, and I believe price will now make its way back down. Another thing to bring your attention to is right here, as you can see, we had this bullish and bearish engulfing, and I believe that price has just come back up to fill out this last bearish engulfing right here. So that is another confluence. Just to add to this bias that price would sell off is if you look at this counter trend line, this counter trend line was broke massively. And although we had a little retest here, I believe this is also a potential retest as well. And take a look at this. This counter trend line mixed in with this downtrend line makes for strong price potential rejection from this zone, from this area right here. So these guys are several confluences that I'm looking at to be like, you know what, price could potentially come hit this zone and then turn around, considering the many things that are happening in this area right here. So another thing we can see is that the EMAs are still crossed to the downside, and then if we look at the RSI, there's a heavy divergence right here, and this is divergence on the 4-hourly time frame. So for me, this is just a strong signal that price should be turning around very soon. And if there's any spot, if there's an area where price could potentially turn around, it should be here. So if I take you back down to the 15-minute time frame where I like to place my entry trades on, we can see that price right now is currently setting up a double top. But what made me get into this market are these wicks right here. So you can see buyers are trying to push the market up, but there's so much selling coming in. So VSA traders will see this candle right here as supply coming in. So for me, this area shows that there is strong selling. So when I saw this candle and I saw that supply was coming in, I got in on the confirmation of the next one, which was actually a bearish candle. So now I'm expecting for price to turn around and make its way to the downside. Where am I looking for this market to go to? I'm looking for market to start reacting between this area right here and this area right here. So this for me is a potential demand zone. So I'll be looking to manage my trade from around this area, just looking at what price does and seeing what momentum starts to give me when price gets to this area. But ultimately, I would like for price to get here, probably give me a little reaction, but then break and head on back down to the downside. My ultimate target would be this low right here, because price has broken this 75 psychological number and price is still very bearish. I'm looking for for the price action to come back, break this structure, but ultimately I'll be taking majority or all of my profits around this area. But that is if price can break this demand zone, so we would have to keep an eye out on that. But basically guys, that's what I've got for this trade. I'll keep you guys posted on how this trade actually plays out. So I'll see you soon guys, take care. What is up guys, welcome back. And I basically wanted to give you guys an update on this trade. So as you can see guys, the trade is moving in our direction, but basically what I wanted to do guys is go over the importance of being able to read price action in its entirety. You know, a lot of people trading Forex, what I've noticed is people just, you know, come up with strategies and they don't really spend that much time in actually trying to develop the skill set of actually reading the chart and price action. The reason why I say this is, for example, not a lot of people use volume spread analysis, and this is basically what I would like to go over in this particular trade setup. So before this whole move down, basically we got in on this candle right here, and what happened was, fair enough, price moved straight away in our direction, but what you then see is we had this massive bullish engulfing, and then price went ahead, went above this point, and it looked like it was about to stop us out of our trade. It came about 4 pips away from our stop loss because we placed it 5 pips above. So as you can see, this was only about 1 pip move, and we still had our stop loss around this area. But the reason why I was able to keep my emotions together is because being able to read volume, I knew that this move to the upside was nothing but manipulation by smart money, by the institutions, mostly because there was little to no volume on the way up. And if you watched the start of the video, you remember me saying that these wicks here was basically supply coming in, and price showing that there was no interest in smart money to push this market up. So what I want to do is basically I'll go onto my MT4 and I'll show you the tool which I use to actually analyze volume. So right here guys, this is my MT4 chart, and what you're seeing here is basically my volume spread analysis setup. This yellow box is basically just highlighting London session, because I trade mostly London session, London New York session, because that's when the most volume is in the market. So for me, it's easier for me to trade in the direction of smart money because I can determine where the volume is, and I can then trade alongside smart money. So what I want to bring your attention to is, remember those wicks I was talking about? Basically these candles here, this is what represents this part right here. So if we go back and I click here, what you see is supply coming in, up thrust, supply coming in. All of these are indication that smart money is basically looking to push the price down. Now guys, just because the indication comes up doesn't necessarily mean that, oh, price is about to turn around. As you see, price went up first before then deciding to turn around and go in our direction. But how did I know that this move here wasn't going up to stop us out? Well, if you look down here, you can see that the volume from this part right here, although this was a bullish engulfing, the volume was below average. And as you can see, as it kept going up, the volume kept dropping. Now look at this bearish candle that came in right here. When this bearish candle came in, we saw that volume was starting to go up. And then on this candle here, although the candle isn't that big, look how small this candle is, but look at the volume guys. This is ultra high volume on this candle. This for me was the confirmation that price was about to turn around in our zone. Now look at this. If you notice this volume on this small candle, look at this massive bullish candle right here. Look how massive that candle is. However, this candle and this small candle here had identical volume. Look at that. So look at this. Look at the black line going across to the left. You see this volume was actually more than this volume over here. And look how small that candle is. So for me, that was a clear giveaway that smart money was coming into this market. So guys, one of the things that I've been seeing a lot recently on YouTube or social media is people talking about Wyckoff schematics and all these things, but what nobody seems to mention is how volume spread analysis actually goes hand in hand with schematics. It's all well and good, you know, to mark up your charts and say, you know, this is the up thrust, this is the lower point of supply. But if you don't understand how volume plays in with that whole Wyckoff schematics, it will be very hard to pinpoint the exact time or the exact point that market is about to turn around. So basically guys, I just wanted to show you this. I typically don't talk about volume spread analysis much, just because there's a lack of interest, especially in Forex, because a lot of people tend to think that volume is useless in Forex. But I'm telling you now, since I've started studying volume, it is not useless. It's actually very, very helpful. And as you can see guys, we've been able to get a nice entry on this trade. We've been able to keep our composure when the market was going against us, because we knew that there was no buying volume in this. Smart money had no interest in taking the price up, so we kept our composure. We didn't close the trade because price was hedging close to our stop loss. We stayed in, and price is now moving in our intended direction. Now what I aim to do is to actually manage this trade. So as price heads over to the first point where I'm interested in managing my trade, depending on how price reacts from this point, I might take half my profits, because from this point here we'll be up 2 to 1. So if I measure this out for you, so from here to the top of our zone is about 12 pips, and then additional 5 pips makes it about 17 pips. And then if we bring that all the way down here, we can see 33 pips, which is about roughly a 2 to 1. So that would be a good profit for us. So what I'll be doing is I'll probably take half my profits from the table and then move stop loss to break even, just because we don't know if price is going to react from this high volume candle where we know smart money is actually operating, is actually interested in. So we'll be looking to manage the trade when price gets to this point, and then we'll take it from there. So guys, I'll be back once price gets to this area, and I'll let you know how this trade plays out. So I'll see you soon guys, take care. Welcome back guys to this final trade update, and as you can see guys, the trade has played out to the pip where I expected price to turn around from and react. Price action gave us a VSA volume spread analysis shakeout on this candle, followed by a bullish engulfing, and you can see there was a retest and straight back up, took us out at break even. And I basically took half my profit when price hit here, as I said I would. So that gave us a 3% profit, and price came back and hit our break even point. For all we know, price could then turn around and continue to the downside. However, I'm not willing to take that risk, because I love when price just moves and continues to break several lows. So that is it for this trade guys. I hope you've liked this trade breakdown analysis. Like I said before guys, if there's something you would like me to elaborate on, possibly volume spread analysis, whatever else I mentioned, do leave a comment in the comment section and let me know what you would like me to go over. But that will be it on this trade. So far, this trade, this pair, New Zealand JPY, has actually given me a plus 6% on my account from last week in just a matter of days, guys. And this is how I basically trade the market week in, week out, just finding confluences to act as support for my trade bias and, you know, managing the trade. And even though, like I said, I had this crazy idea of where I thought price would go to, even though price barely got to that area, I'm still taking profits off the table. And that is what trading is about, guys. Trade management, account management, risk management, this comes first. So anyway, I hope you've enjoyed this video. I'm going to check out now and I'll see you guys on the next video. Thanks for watching, guys. Don't forget to subscribe. Don't forget to like, and I'll see you on the next one.